Every year, billions of dollars quietly shift hands from individuals to corporations in an industry designed not to reward success, but to profit off failure. The $1.5 trillion industry built on your loss is none other than the global insurance sector. Insurance is an agreement between an individual or business and which protects people against financial losses due to unexpected events. At its core, it promises peace of mind, a safety net to catch you when life takes an unexpected turn. But behind the glossy brochures and reassuring slogans lies a machine engineered to generate massive profits, often at your expense. To understand how this works, let's break down the system. First, insurance companies collect premiums from customers. These premiums are pooled together to pay for claims when something goes wrong: a car accident, a medical emergency, or a house fire. This pooling of risk is the foundation of the insurance model. However, the industry's profitability doesn't come from just collecting premiums. It's about ensuring that payouts remain significantly lower than the amount collected. This is where the incentives of the insurance industry and the interests of consumers diverge. The less an insurer pays in claims, the more it profits. To achieve this, insurance companies deploy a range of tactics that subtly, or not so subtly, work against you. One major tactic is the art of denial. A claim may be rejected for reasons as seemingly minor as a missed deadline or insufficient documentation. For example, in health insurance, a procedure might be deemed experimental or not medically necessary, shifting the financial burden back onto the consumer. In property insurance, claims might be underpaid by disputing the value of damages or blaming the loss on policy exclusions. Consider a scenario. A homeowner's house is severely damaged in a storm. They've paid their premiums diligently for years, trusting that their insurance will cover them. Yet, when they file a claim, they're hit with hurdles. Adjusters minimizing the damage, disputes over repair costs, or delays that stretch into months. This isn't an anomaly, it's a feature of the system. And then there's the complexity of the policies themselves. Insurance contracts are often written in dense, jargon-filled language that's nearly impossible for the average person to fully understand. Hidden within these documents are exclusions and limitations that can render your coverage virtually useless when you need it most. For instance, let's talk about health insurance in the United States. The system is infamous for its opacity and unpredictability. You might have a policy that covers hospital visits, but when the bill arrives, you discover that the anesthesiologist was out of network, leaving you with a staggering expense. Or you might face surprise medical bills because your emergency care provider wasn't covered, even if you had no choice in selecting them. But the challenges don't stop at claims and coverage. The industry also manipulates premiums to maximize profits. In auto insurance, for instance, your rates might increase after an accident, even if it wasn't your fault. Insurers use data analytics and algorithms to determine risk, but these calculations often go beyond driving records to include factors like credit scores, education, and even zip codes. This practice, known as risk-based pricing, can lead to discriminatory outcomes, disproportionately affecting low-income and minority communities. Let's not forget the lobbying power of the insurance sector. With billions at stake, companies spend heavily to influence legislation and regulation. In the United States alone, the insurance industry spends hundreds of millions of dollars annually on lobbying efforts. This influence helps shape policies that often prioritize corporate interests over consumer protection. For example, in many states, there are laws capping damages in lawsuits against insurers, making it harder for consumers to hold them accountable. Therefore, at its best, insurance is a vital tool for managing risk and providing security. Yet, the $1.5 trillion industry's current structure too often prioritizes profits over people. By shining a light on these issues and advocating for change, we can push the industry toward a model that truly serves the public good. If you liked this video, please consider subscribing. Until next time.